You heard Garfield there. There's the potential for yields to go even higher, the 10-year back towards that 5% as well. Does it happen?
I would say the chance is 50-50, right? You cannot rule it out. We have seen in the last 4 largest bond sell-offs in a decade, the typical movements have been more than 100 bips, right? And we have already seen the yields move up from December 27 up by 80 bips. So another 20-25 bips movement cannot be ruled out, and 5% within reach after that.
Did we reset in the last few sessions? It felt like the Fed reset. Are we at zero again?
I mean, you have been seeing a lot of writings on the wall. A lot of analysts are saying that rate hikes are not out of the picture. But our economist view is that we'll have 2 rate cuts, one starting in July or September and one towards Q4. So I won't say we are at zero, but probably we are at 70%.
What makes you think that that's doable? Because we seem to have stalled out on progress on inflation.
Yes, inflation is one part. Fed would not like to be very proactive in terms of take a decision which can actually spur the growth and inflation. But at some point of time, these high interest rates are not sustainable, and they would like to cut sometime in July and September rather than wait for the election time.
Well, why would they be able to do it in July and September? Won't we have to see a string of data that shows us that inflation is back under control? Or will more people have to change their idea of what neutral is? We are getting more people doing that, by the way.
Absolutely. I mean, 2% is an arbitrary number, to be honest. And if the Fed is happy at 2.8%, then so be it. What's more important for them is to probably protect the currency and job market. And if they see a little bit of weakening, and we'll have a string of data before the July FOMC meetings, that could help them take a decision at that point of time. And they're very data dependent, to be honest.
If we don't get services inflation moderating, can they go in July?
As I mentioned, there's a chance, right?
Yes.
Obviously, services, and don't forget that there is a manufacturing rebound as well. We'll have the preliminary PMIs coming out. So both PMIs as well as inflation, and if you look at the jobs data, they are the 3 important characteristics I think the Fed will be looking at. And if they remain strong, probably they will miss July. We'll look at September then.
How would the Fed engineer cooler demand? Would it ever want to?
Not really, not an oil expert, but in the sense that we have, at the start of the year, we mentioned that geopolitics is a key risk in our year-ahead outlook. And despite the recent uptick in geopolitics, we have not seen a lot of movement in oil as such. Even the Treasury sell-off, was not great at that point of time. So we think that this de-escalation will happen at this point of time, and oil should be range-bound. Our economist target is $85 a barrel, average for the year.
And we are close to that right now, and I guess that would help with inflation dynamics as well. Is policy at this point restrictive when you see where rates are at and how, we've seen some selling in the Treasury market? Some at the Fed are saying, yes, it's quite restrictive, including John Williams and Fed Chair Powell himself. How restrictive is it?
I would say it would be a little bit higher than neutral, because we have seen a lot of fiscal impetus that has been given to the real economy as such. So at this point of time, even if monetary policy is restrictive, fiscal policy remains accommodative. So overall, markets are running with liquidity at this point of time. We have seen, as I mentioned, our manufacturing rebound, inflation growth has stalled. So I think Fed will wait before changing its tone to a more dovish in nature.
We do have a hefty auction schedule this week. Will the market have the appetite for all of this supply?
I think 5% is kind of a holy grail for the 2-year yield, right? Last time we saw that, we saw a lot of appetite. Even last week, the 20-year auction went on smoothly. So I don't think there will be any trouble in the market digesting this amount of auction that's due.